Imagine walking into a store with empty pockets, yet still being able to buy almost anything you want instantly. No cash, no waiting, no immediate consequences, just one small plastic card that makes spending feel effortless and unlimited. For millions of people around the world, credit cards feel like financial freedom. They offer convenience, rewards, discounts, travel points, cashback, and the ability to buy now while paying later. Banks advertise credit cards as symbols of smart financial living and modern convenience. Commercials show happy people traveling, shopping, eating at luxury restaurants, and enjoying life using their cards without stress. But behind the attractive advertisements and reward programs lies a financial system designed very carefully to make banks enormous amounts of money. And the uncomfortable truth is that many people don't fully understand how credit cards actually work until they fall deep into debt. Today, we are uncovering the truth about credit cards that banks rarely explain clearly to ordinary people. We'll explore how credit cards affect human psychology, how banks profit from debt, why minimum payments are dangerous, and how millions of people slowly become trapped financially without realizing it at first. Because credit cards are not automatically evil or dangerous, but they become extremely risky when people use them without understanding the system behind them. Let's begin with one important question. Why are banks so eager to give people credit cards in the first place? Think about it carefully. If banks were losing money from credit cards, they would stop offering them immediately. But instead, banks aggressively advertise them everywhere. Students receive credit card offers, young adults receive offers. Even people with limited income are constantly encouraged to apply for cards. The reason is simple. Credit cards are one of the most profitable businesses in the financial industry. Banks make billions of dollars every year through interest charges, late fees, penalties, and consumer debt. In fact, many banks secretly prefer customers who remain in debt for long periods of time, because people who fully pay their balances every month generate far less profit for banks compared to people who carry debt continuously. This is where many people misunderstand how credit cards truly work. A credit card does not give you free money, it gives you borrowed money. Every purchase made with a credit card is essentially a short-term loan from the bank. And if that loan is not repaid quickly, interest begins growing silently. At first, the debt may seem small and manageable. Maybe someone spends on clothes, food, gadgets, or entertainment thinking they will pay it off later. But once interest starts accumulating, the situation changes rapidly. Many credit cards charge extremely high interest rates compared to other forms of borrowing. Some people end up paying far more in interest than the original cost of the product itself. This is exactly how small spending habits slowly turn into long-term financial pressure. One of the biggest psychological tricks behind credit cards is that they disconnect spending from emotional pain. Studies show that people often spend more money using cards compared to cash. Why? Because physically handing over cash feels emotionally uncomfortable. You can actually see your money leaving your hands. But swiping a card feels fast, easy, and emotionally painless. Digital spending creates psychological distance between the purchase and the financial consequence. This makes impulse buying far more likely. Online shopping has made this problem even worse. With saved card details, one-click checkout systems, and instant approvals, spending now happens within seconds. The easier spending becomes, the less time people have to think rationally about their decisions. Banks and companies understand this psychology extremely well. This is why credit cards are often linked with rewards, cashback, airline miles, discounts, and exclusive offers. These benefits make spending feel smart and rewarding instead of dangerous. People begin focusing on points and rewards while ignoring the larger risk of overspending and debt accumulation. One of the most dangerous things banks promote is the minimum payment. Every month, credit card statements usually show a small minimum amount that customers are required to pay. Many people believe paying this minimum protects them from financial problems. But in reality, minimum payments mainly protect the bank, not the customer. Why? Because paying only the minimum allows interest to continue growing on the remaining balance. This means debt can last for years, sometimes even decades. A person may keep making monthly payments while the total debt barely decreases. In some cases, people end up paying double or triple the original purchase amount because of long-term interest charges. And this is exactly how banks maximize profits from consumer debt. Another hidden danger of credit cards is lifestyle inflation. Once people gain access to large credit limits, they sometimes begin living beyond their actual income level. Expensive restaurants, luxury shopping, gadgets, vacations, and entertainment suddenly feel affordable because payment is delayed into the future. But delayed payment does not remove financial responsibility. It simply postpones it. Over time, some people build lifestyles supported entirely by debt rather than real financial stability. Social media has intensified this problem dramatically. Many individuals feel pressure to appear successful online through expensive experiences and purchases. Credit cards make it easier to maintain that appearance temporarily, even when financial reality is completely different behind the scenes. This creates a dangerous cycle where people spend emotionally while hiding financial stress privately. Eventually, debt begins creating anxiety, sleeplessness, relationship problems, and emotional exhaustion. Financial stress affects mental health far more than many people realize. Some individuals become trapped in cycles where most of their income goes toward interest payments rather than savings or long-term goals. Instead of building wealth, they spend years paying off past spending decisions. Credit scores also play a major role in the modern financial system. Banks encourage people to use credit cards regularly to build credit history. While responsible card use can improve financial opportunities, it also encourages people to stay connected to debt-based financial systems for long periods. Missing payments or carrying excessive balances can damage credit scores and create additional financial difficulties later. Another truth many people don't realize is that banks use customer data to study spending behavior very carefully. They analyze purchase habits, financial patterns, repayment behavior, and consumer psychology to market products more effectively. Modern banking is heavily driven by behavioral economics and emotional spending patterns. This is why personalized offers and targeted promotions feel so effective. So, does this mean credit cards should never be used? Not necessarily. Credit cards can actually be useful financial tools when used responsibly and strategically. Some people use them for convenience, fraud protection, travel benefits, or building healthy credit history while fully paying balances every month. The key difference is discipline and awareness. Financially smart users treat credit cards like temporary payment tools, not free money. They spend only what they can afford to repay immediately. They avoid emotional spending and unnecessary debt. They understand how interest works instead of ignoring it. Most importantly, they never allow lifestyle desires to exceed financial reality. The biggest danger of credit cards is not the card itself. It is the illusion they create. The illusion that future income will always solve today's spending. The illusion that minimum payments mean financial safety. The illusion that appearing wealthy is the same as being financially secure. Because in reality, true financial freedom does not come from unlimited spending power. True financial freedom comes from controlling debt before debt begins controlling your entire life.